Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions.
Hey there, investors. Hope you're all doing well. We've got some exciting news in the world of big tech earnings. It's always a thrilling time when we see those positive earnings reports rolling in. It's a good sign for the market. Now, here's a fun fact for you. Have you ever wondered where the terms bull market and bear market come from? Well, it's believed that these terms originated from the way these animals attack their opponents. A bull thrusts its horns up into the air, symbolizing a rising market, while a bear swipes its paws downward, representing a declining market. Interesting, right? Moving on, today we're going to dive into a couple of interesting topics. First up, we'll be discussing the impact of the Israel-Hamas war on the market. It's an important geopolitical event that could have significant implications. Next, let's talk about everyone's favorite cryptocurrency, BTC. The big question on everyone's mind is where it's heading. Is it going up? Is it going down? We'll try to shed some light on that for you. Last but not least, we've got some important advice for you. We'll be discussing why it's best to stay away from private student loans. Trust us, you don't want to miss out on this valuable information. So grab your morning coffee and get ready for an informative and exciting episode of Morning Download. Let's jump right in. The ongoing Israel-Hamas war could have negative implications for neighboring economies like Egypt, Lebanon, and Jordan. The International Monetary Fund, IMF, warns. Sectors such as tourism are expected to suffer, and there could be disruptions in supply chains, leading to higher transportation costs for moving goods. Additionally, these countries might see an influx of refugees, potentially impacting their economies further. So far, the global economy hasn't been significantly impacted by the war. Oil prices experienced a slight increase but have since retreated and remain below the highs of September. However, there are other developments worth noting. The United States has joined forces with Gulf nations to target Hamas's alleged secret investment portfolio, which could be valued at up to $1 billion. On a global scale, Qatar has made a significant move by solidifying its position in the European gas market through a deal with Eni. In addition, sentiment is improving as Beijing takes action to support its own economy. The sub-Saharan African economy is projected to grow by 7% next year, and the Bank of Canada has maintained its benchmark interest rate at 5%. Meanwhile, U.S. new home sales experienced a surge in September, reaching their highest level since February 2022. The median sales price also decreased from $430,300 in August to $418,800 in September. So, Alphabet had a rough day, experiencing its worst down day since the start of the pandemic. And this had a domino effect, with the NASDAQ 100 finally breaking through its September lows. It wasn't just Alphabet feeling the pain, though, as Meta, another big company, announced its earnings yesterday. The good news for Meta is that revenues rose a whopping 23% year over year, which is their fastest growth since 2021. They brought in $15 billion, surpassing expectations of $33, $56 billion. And it wasn't just revenues that performed well, but also earnings per share, EPS, which came in at $4.39, higher than the expected $3.63. Meta's ad business seems to be rebounding nicely, outperforming its competitors after declining for 3 consecutive quarters last year. And the company is optimistic about the future, expecting to generate revenue of $36, $5 to $40 billion for Q4, aligning with the consensus view of $38, $85 billion. However, despite these positive results, the stock fell 17% during the day, and an additional 35% after the closing bell. It wasn't just Alphabet and Meta facing challenges, though. Other big players like Nvidia, Amazon, and Netflix also saw their stocks take a hit. In other news, it's worth noting that sales of weight loss drugs are projected to surpass $100 billion. Treatments like Wegovy and Mounjaro are exceeding initial estimates, indicating a significant demand for these products. So let's talk about crypto. It seems like October's weekend rally might just be the beginnings of a bull run leading up to 2024. Bitcoin, which had a bit of a rough time in September, with a lower low at $25,386, has now climbed back up over $35,000. This is the first time it's reached that level since 2022, so it's definitely something to keep an eye on. Speaking of keeping an eye on things, there are a few key events coming up that could impact the crypto market. On October 27th, we have the Core PCE Price Index, followed by the Fed interest rate decision and Fed press conference on November 1st. Then on November 3rd, we have the non-farm payrolls report. All of these events could potentially have an effect on Bitcoin and other cryptocurrencies. Now let's talk about the interest rate. The FedWatch tool from CME Group indicates that there's a 4% probability of a pause in interest rate hikes on November 1st. However, there's a slight one, 6% chance that the Fed might pivot and actually cut rates. So it'll be interesting to see what happens there and how it might impact the crypto market. Looking ahead to 2024, there are different opinions on where Bitcoin is headed. Standard Chartered, one of the largest banks in the UK, predicts that the Bitcoin price could reach $50,000 by the end of this year and even hit $120,000 by the end of 2024. While we may not see that $120,000 mark next year, hitting $50,000 is definitely a possibility. All in all, the crypto market is full of surprises and exciting possibilities. So, keep your eyes peeled and stay tuned for more updates. Private student loans may not be suitable for everyone. It's important to consider these loans only if you have already exhausted all your options for federal aid. Federal student loans offer affordability and additional benefits like forgiveness programs and the ability to pause interest. Unfortunately, private loans do not come with these features. One of the biggest risks with private loans is the consequences of not being able to repay them. If you fail to make payments, lenders have the right to sue you for recovery. This could lead to wage garnishment and even asset seizure. What's more, these risks don't just apply to you as the borrower, but also to your cosigner, which makes private loans even riskier. Another aspect to consider is the interest rate. While variable rates might seem more attractive initially, it's essential to look at the bigger picture. We are currently in a rising rate environment, which means the rate on a variable loan could end up being much higher than expected. It's generally advisable to opt for a loan with a fixed rate. Most private lenders offer rates between 4% and 15%, which is usually higher compared to the 5% charged by federal agencies. Before deciding to go for private student loans, carefully weigh the risks and benefits and make sure you have explored all your federal aid options first. Have you ever felt the pressure to follow the crowd, especially when it comes to your finances? Well, today's personal finance quote reminds us of the importance of willpower in staying true to our own investment strategies. As the legendary investor Ben Graham once said, even the intelligent investor is going to need considerable willpower to keep from following the crowd. It's no secret that peer influence can be strong, particularly in the realm of finance. We often hear about the latest investment trends or get caught up in the excitement of a popular stock or cryptocurrency. But Graham's words serve as a valuable reminder that blindly following the crowd can lead to poor decision-making. As intelligent investors, we should strive to make informed choices that align with our own financial goals and risk tolerance. While it's essential to stay informed about market trends and opportunities, we must retain the willpower to resist the temptation of herd mentality. By sticking to our investment plans and avoiding impulsive decisions driven by the crowd, we give ourselves the best chance for long-term success. Remember, investing is a marathon, not a sprint. So let's channel our inner willpower and stay true to our own investment strategies, even when the crowd seems to be headed in a different direction.
In today's episode, we covered positive tech earnings, the impact of the Israel-Hamas war on neighboring economies, mixed earnings for Alphabet and Meta, Bitcoin's price predictions, the disadvantages of private student loans, and the importance of willpower in investment decisions. Thanks for tuning into the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com. Subscribe.